Hey everybody, thanks for joining. We're going to give it 1 or 2 more minutes just to let a few more folks dial in, and we'll get started.
Are any of you traveling this week or at your office?
I'm
I'm in
I'm
the
hitting a
old home
plane for
right
Las
now.
Vegas tomorrow, or for tonight, right after this.
Nice.
All right, guys. I think I still seeing some people trickling in, but I think we can probably get started. So I will kick things off here. Thanks again, everyone, for joining today's discussion. I'm Jared Ingersoll with Uptiq. I'll be moderating today's fireside chat, and on behalf of the group here, whether you're a member of the Circle ecosystem or joining us from outside the network, we're really happy to have you with us today. Some of the topics we'll cover include understanding what AI really means for credit unions, some of the best ways to get started with your first use case, and then taking it a step farther, how to choose a future-proof partner for your next evolution. We should also have some time at the end to open the floor up to some questions from the audience. You'll see a Q&A button at the bottom of the taskbar in this meeting, so feel free to submit your questions throughout the session or when we open it up for Q&A. Before we kick things off, just a quick blurb about Uptiq AI for those who might be new. We're a QSO offering an AI orchestration platform. So to put that more simply, you can think of us as custom builders, right? We don't believe in selling one size fits all off-the-shelf software tools. Instead, we act as your dedicated AI partner. We'll work directly with you and your teams to build custom agents that map to your unique credit policies, to your unique member segments, and your existing legacy systems. With that, I'd like to introduce our three panelists, Nick Evans and Jim Ryan from Curql, and Kyle Kneubuhl from our team here at Uptiq. I'll let them introduce themselves. Nick, do you want to start?
Sure. Thank you very much, Jared. I'm Nick Evans, President and CEO of Curql Collective, and proud to be investors in Uptiq. There's a reason we invested in Uptiq, and you're going to hear why here in a second because of the ability to do the many things that Jared just talked about. Most importantly, it is a platform AI company that can do many different things in your credit union. So I'm going to be quiet and let the experts talk here and just listen from here on out. So thank you.
Thanks, Nick.
Yeah, and hello everyone. I'm Jim Ryan, VP of Strategy and Growth at Curql. I've been with the team for 4 years in both the credit union industry basically my whole life. My first role was as a teller, as an intern back in 2004, right after high school. And I've worked in different capacities in the credit union space, both as a business partner to credit unions and as an executive at a credit union. So super excited to be here and help share the good word about everything that the Uptiq platform is providing our industry and the innovation that we're looking to see progress this year.
And hi,
All
everybody.
right,
I'm
Kyle.
Kyle Kneubuhl. Yeah, I'm the managing director of our credit union and banking solutioning team here at Uptiq. And just like Jim, I'm also a lifelong banker. Started as a teller at 17, led commercial CNI, CRE, private banking teams throughout my career, and now help our team work directly with credit unions to understand what they're trying to solve for with AI because we've sat in the seats just like you guys have and partner to really build solutions that work for both legacy problems and then where we're going in the future. So nice to meet everybody.
All right. So let's dive in here, and we've actually got some poll results to start the conversation. For a lot of the marketing outreach we did before today's event, we asked a lot of our registrants a specific question, and that was if you had a magic wand, what's the number one bottleneck you would solve at your institution today? And I'll pull up the results here. And this is where we can see exactly where the industry is feeling some of the most pain right now. and I'll just rattle them off from top to bottom, and then we can open it up to our panelists to discuss. So number one, top of the list at 35% was reactive legacy infrastructure, which makes a lot of sense with the rigid legacy systems that we still really see as the backbone of many financial institutions' tech stacks today. Number two was operational inefficiencies, and I actually think this one is more of a symptom of number one. This is the classic kind of swivel chair problem where we see staff spending hours moving data from one system to another and just a lot of manual work happening behind the scenes. Third, at 22% was risk and fraud detection delays, where the primary frustration was just that really current tools are too reactive and credit unions are catching fraud and account takeovers after the damage is already done. And then lastly, last but certainly not least, member onboarding and relationship switching friction. So we heard from several of you that a big inhibitor to growth is the difficulty of onboarding a new member, whether that's just completing that initial intake with manual document processing and then branch visits, but then actually transferring direct deposits and recurring bill pays. So, Jim, I'll start with you. Seeing this data, does any of this surprise you considering how many credit unions you work with?
Well, it's really great data, Jared, and Curql earlier this year did some work around this ourselves, identifying what are the top use cases and what are the most emerging threats to the credit union industry. And all of these things were found in our survey too, amongst others. Data insights being one, compliance, lending, mortgages, really anything that where an AI platform could help streamline workflows for the credit union. That's the magic wand moment is whichever one of these is the anchor for a partnership with an AI platform, particularly yours, is just the starting point. And then being able to work horizontally in the organization to identify other workflows that can be optimized utilizing AI. I think that's where the real power of this comes and will be seen over the next year for many credit unions.
Oh, that's terrific.
Yeah,
And Kyle, yeah, go ahead.
yeah, no, I echo that. I mean, most of the credit unions we speak with, and a really great starting point, and that's kind of where we developed a lot of our turnkey agents are on what's not working today, what are the systems that we're working with, where are the inefficiencies, where are the gaps, how do we want them, how do we tie in all that data from our legacy systems and actually be more useful with it, either for insights or manual processes. It's actually a really good starting point of let's make what you have better, especially with your legacy invested systems. And then from there, be able to make them work together and put a data intelligence layer over them. And from there, maximize the output. It's a great starting use case. I'm not surprised at all that that's where a lot of people are feeling pain. And then from there, obviously going into risk and fraud in both front, middle, and back office, and be able to apply it across the board is going to be important going forward.
Terrific. No, thanks, Kyle. And I'll actually stick with you here. I'm going to stop sharing my screen, but I think that's a good segue into the next topic. Listening to that list of use cases, right? We've got commercial banking, fraud detection, call center and collections, just to name a couple others. I mean, it sounds like we're talking about buying and integrating 10 completely different applications. But I think the way we talk about it here at Uptiq, that's not as often the case, right? We're not talking about applications that need to be strung together. We're talking about deploying agents, which is, I think, conceptually different from the way a lot of people are stuck looking at AI. So I guess before we really drill into that, Kyle, just really quickly, I want to take a step back and try to demystify this for maybe some of the non-technical folks in the room. When we hear the term AI agent, how should our audience conceptualize what an agent actually is, and how is that different from the traditional rigid software systems that they're used to?
Yeah, no, it's a good question. A lot of these new AI terms kind of get thrown around, and in some cases it means different things to different people. But when you hear agents, the best way to summarize it very simply is an agent, at least an Uptiq standpoint, is a pre-skilled employee, if you will. So I'm a lifelong banker. I've been lending my entire life. I already have pre-canned skills. I know how to do analytics. I know how to structure covenants. I know how to work with clients and members. And at the end of the day, if I were to be hired into any credit union, now we need to be able to configure to understand how does that credit union want that done. So here at Uptiq, when we have an agent, it comes with those skills, and then we also have the configurability to understand for whatever the credit union's process is to adhere it and teach it how to do that process. If the output needs to be a certain form, we can ingest it into where it gives you that output of that form. So an agent is pre-skilled, but also configurable to understand and solve problems or do tasks within a credit union the way that that credit union wants it done. That's how we do agents.
Thank you. Thank you. Figured that was an important box to check off before we get deeper here. So, all right, next topic's a big one. And I think really one of the biggest strategic questions a lot of executives face right now is, especially when it comes to AI, is the classic build versus buy dilemma. So do I want to buy something pre-built from a vendor that I'm confident is built well, but maybe not necessarily for my business? Or do I want to try and build something out internally that truly speaks to my needs, but likely involves a lot more resources and a good bit more risk? And then we're even seeing a lot of credit unions trying to build tools internally using open LLM sources. So, Jim, I'll start with you here. How do you think about the build versus buy dilemma? And are you seeing meaningful results from open LLMs in the field?
Yeah, it's a great question. And it's a question that we've asked in the credit union space, and I'm imagining all industries, just this is mine. But over the last 15 or 20 years, do I build or buy a CRM? Do I build or buy a lending software? Do I build or buy a mobile app? The credit union I work for built their own mobile app, which was really great, and it was the highest rated mobile app in our area. But sometimes that creates limitations. And we had talked about legacy tech, and you build something that's kind of at that time really, really impressive and helpful, but in the future, it's not as nimble as you need it to be. So when it comes to agentic AI, I think that there's a place for building, perhaps, especially in knowing and utilizing these tools and having an intimate personal knowledge of how to build something with them. But when it comes to fully executing a platform play across an institution with, pick a number, 100,000, 1 million members, it becomes much more difficult to do it. One of the projects we've been working on this year at Curql is around credit union and fintech readiness or partnerships. And in that process of meeting with our credit union limited partner leaders, I've actually come across some that have built an entire framework for build versus buy, where they're actually building in weighted measures on every decision they're making for a potential new product integration on that framework based upon timelines and costs and future readiness. So I do think there's a scale, but at this scale of a project, partnership with the right company is where you're going to go faster because you're working alongside other credit unions and that particular company to help shape it for the industry. And you benefit from other credit unions' experiences, asks, requests. We all have a magic wand for Uptiq, but when you have an entire suite, a whole library of solutions, that's where I think the magic can really happen, is because you don't have to recreate the wheel every time.
That's great. And Kyle, do you want to weigh in here as well?
Yeah, I mean, I was recently asked this question at a conference that we had in San Francisco with about 25 CEOs and CXOs of credit unions. And the build versus buy dilemma to me is an interesting one because I just don't think it's the right question. I think it's both. I think you need to partner and build. And just like, banks shouldn't be holding real estate. They lean on others to get it off their books, or, you need to really do what you do well and partner with those that do what you need well. So I actually have something out of that conference that I'll show real quick around that. We were having a discussion around, problems within the credit union of, older members when they're passing away. How do we identify that so we can go out and talk to the next generation, retain that account? And one of the credit unions brought up that they had, I think, 35 members that were over 115 years old, which obviously I think we know is almost virtually impossible. So I wanted to show them, and they were talking about, do we build something with Copilot, or how do we identify this? And so we actually in real time, and I'll share this very quickly, we actually in real time in the room built a product requirement document just with a simple LLM with native language. And this is our builder. This is where we prototype things and put them into production for credit unions. But with this simple document, we built it very quickly in about 3 minutes and 51 seconds. And so this system would tie into the source of truth, whether it be a core system or a legacy system. It cohorted the members out by age ranges and actually will identify when their bank accounts don't have transactions or there's longevity in transactions, alert them. And then from there, if we actually go into the members, give them a score. So in this case, Robert Brown is at 5%, there's inactivity on the account. And if we wanted to look at detail, we could understand the age range, and the last transaction they had was an actual service fee in December. And so from here, the agent that we built within this in real time will go out and look for open information on obituaries or social media presence. And in this case, unfortunately, Robert did pass away on March 12th. So because of this system, and we built it very quickly, we can modify this. And again, this is an application to show it, but we can plug this into a data system to monitor this on your behalf. And this is just one agent that we built in 3 minutes, and then we would put it into production. So when we talk about build versus buy, it's more partner and build, to where someone in a room thought, hey, this is something we need. This is kind of how I want this to work. Can you make that come out of my brain, go onto our builder and go immediately? And because at least at Uptiq, we have these underlying skills where it can do this, all of those come together very quickly to give you an understanding of where to start, and then from there expand. So build versus buy, I just think it's the wrong question. And at Uptiq, we're trying to make people understand this is where the future is going. You're not buying a box solution. You can develop it, understand it, contextualize it, and then we can make it reality.
Kyle, I think in our conversations, we talked about build. Oh, I'm sorry.
Mm-hmm.
Go ahead.
Thank you very much. We've talked about build, and when we hear build in credit union land, that's a massive project. That's everybody coming together and agreeing that this is a priority, and this is the resources and effort that's going to be put toward it. When you talk about build at Uptiq, it's different. It is much faster. It's more nimble. It's more creative and less just execution on a long timeline, but utilizing the agents to be able to build something rather quickly. And it's been really serendipitous. The opportunity to invest in Uptiq, us doing our threat survey, coming up with a hypothesis that agentic AI was part of the solution for many of those threats. Nick had a wonderful idea on doing build-a-thons. And so right now, Curql is hard at work creating some build-a-thon events for our limited partners, where we're going to be hosting, or we're going to be hosted by some credit unions, and Uptiq will be there, and we're going to build new solutions, MVPs, most viable products together. And you wouldn't believe it. When we went down this road, it sounded too good to be true, but it is. From 9 a.m. in the morning till 3 p.m. in the afternoon, our goal is to be able to create 3 new MVPs that then Uptiq can go back to the office and turn to actual product offerings. So this space is moving so quickly, and then within the space, the building is not the building that you had before. It's much different and much faster.
Yeah, no, I'll echo that. I mean, I think one of the biggest inhibitors of this technology is the word build is very intimidating. People, when they think build, they think coding, they think systems and everything. And to be honest with you, I think we need to change or have people understand that build is more of give us the information of what you needed to do, how you want it to work, and where you want it to work. That's the extent of the building. And then if you have a partner like us, we can create it, test it, change it in real time with native language, as you saw there was no coding involved. It was a simple native prompt of this is what I needed to do. This is what I need to get out of it. We put it in and our system can generate that. So I think the technology has gone so fast that that middle part where you really need intense coding, you really need, testing, and it's just going so quickly. So what I would say is do not be intimidated by the word build. If anything, be imaginative around it. What would I build if I could solve a solution with waving a magic wand? And I know it's an old trope that people use, but what I will say is not unfortunately, but the technology is caught up to where that is the reality now. So if you can think it, we can build it.
And thanks for showing the example as well. I think it's amazing how fast and that's a very targeted and specific use case that I think can be turned into a quick win now, but historically wouldn't have been possible to develop really before the age of AI, at least not being able to develop it at scale. So very exciting to see how fast things are moving now. But just to get kind of real and switching gears, getting a highly specific use case to work in a quick demo is one thing. Actually rolling it out successfully at a credit union is another. So switching gears, Jim, I'd love to hear kind of big picture from your vantage point at Curql, seeing probably dozens of fintech pitches, probably more. What separates a truly successful AI implementation from one that it falls flat?
I think it comes back to compliance. I think that's number one. Our regulators are looking at AI very closely. And so being regulatorily sound in how that's rolled out, how that's monitored, how the models are being watched closely. I think it may be the number one thing. And then obviously, I think starting with something, if you aim small, you miss small. So, in my opinion, if you really focus in on this is what I'm going to do with the first project and hit that target, get key learnings from that first project, and then expand. Um, I think you aim small, you miss small, and then you grow big. Nick?
That's great.
And I'll
Go
say,
ahead,
Great
Nick.
insight.
I'll say that we have seen a lot of demos and a lot of company pitches, and I don't know if I've seen any that have fallen flat, to be honest. Just to add to the language you just used, because um, everyone entering the space and it's rapid. They're sharp people and they're smart people out there, and I was at FinTech Meetup a couple weeks ago and we had a lot of meetings. We had 5 Curql representatives at FinTech Meetup and we had a lot of meetings. And every one of the companies had AI in their name and they had agentic AI tattooed on their forehead when they walked into the meeting. So I haven't seen anything fall flat. I mean, sometimes founders are a little harder to communicate than in other founders, and um, but at the same time, it's moving rapidly, and there's a lot of people entering the space. So, credit unions have their work cut out for them in kind of sorting through all this. But I see, there's some other people on the call here that are doing some great things around helping credit unions sort that AI and the companies offering it. And so that'll be an interesting development as we go. But again, we feel that partnering with Uptiq was a great move on Curql's part. And it seems like the credit unions are really, um, I guess, agreeing with us in their conversations with you and companies like you. There's other great companies out there. So I don't want to just say that we think we are partnered with we think we're partnered with the best, but there's other great companies out there. So, but again, I don't know if I've seen anyone fall flat, I guess, Jared, just to,
That's good.
belabor
Good to
it.
hear.
Yeah.
That's great to hear. No, Kyle, do you want to talk a little bit about what you've seen in some of the implementations you've worked on?
Yeah, yeah. I'll kind of change the question a little bit. I mean, successful versus unsuccessful. I'd rather turn the question on its head to say, how can a credit union have success start implementing AI? And to Jim's point, start small. I mean, we have institutions that come up and go, we want to do a full agentic LOS, which we already have a large menu of places where we started, whether it be deposit account onboarding and opening, or, complex spreading, or credit memorandum generation, or loan monitoring and covenant monitoring. We have all these things that we can literally plug and play. And we did that on purpose because that's a very easy way to drop an agent in, either with your existing tech stack or by itself, and go to immediate ROI, but really understand how it works and how quickly it can be brought up. And so when a credit union is trying to start very small, start with something isolated, something that you can get metrics around ROI, you can get productivity, you can understand capacity increase from it, and then from there expand. And that's really where that right partner comes in. So a lot of the times, we're probably one of the only fintechs that'll say, look, I know you have this giant dream, and absolutely, but let's start somewhere. Let's isolate an area. Let's really get your technology team around it. Let's get obviously your end users around it, your lending team, or your deposit team, or your compliance team, or your fraud team, and let's really drop in and go from there. And when it comes to partners, Nick, yeah, there's a lot of financial technology companies that are doing great things. And one of the things that we say is we play well with everybody. A lot of people say, who's our competition? We don't really have any. We build for legacy systems. We actually white label agents to help, the large LOS providers or the core providers do what they do better. If we see another financial technology company that's doing something really neat, like right now we're talking to one that's developing a way to do closing documents very quickly. They've partner with a law firm to be able to read credit memorandums and immediately be able to extract from thousands of templates to build documents. That's an undertaking. Could we do it? Yes. Is it on our immediate roadmap? No, but we know it's a need. Laser Pro have limitations. TrueStage is very expensive. So we would bring them in and then offer that as a solution. So I think also having a partner that understands that they're not going to be able to do everything for everybody at all times, but knowing that they have a network of other financial technology companies that they'll work with in order to solve solutions for credit unions, I think that's the other part of this that people are evolving to, and those partnerships only, gain value for the end users.
Great. And yeah, I mean, to summarize, it sounds like find a quick win, or not necessarily a quick one, but a well-defined win with a business case and measurable results. And then I would just add, I mean, keep a project owner in the room after formal implementation is complete, I think is another big one that we've seen to make sure that the follow through is everything.
Agreed.
All right, so we've got 15 minutes, and I do want to make sure we've got plenty of time for Q&A from the audience. I have seen some questions coming in, so I'll give you guys one last big question here. So what does a fully AI-enabled credit union actually look like in 3 to 5 years? And I'll let whoever wants to take that one can jump in. I know it's a big question.
I'm guessing Jim staying on mute means I start.
Go for it, Kyle.
Yeah, I mean, honestly, it's a hard question to ask. The two areas that when I think about the next 3 to 5 years, the one that credit unions always ask is, what does this do to our employee members? Is this going to displace them? Is this going to limit it? I actually think it's the opposite. I think you can take a really good member and take them from a 3x to a 10x, because you're just getting rid of the manual monotony and where they have to be more experts on the systems and they use them, the tasks they're trying to solve. And I think this is really just going to tighten up the way that people work. And the other part is what this will make a credit union or credit unions look like in 3 to 5 years. That question, I think, will be answered by the credit union. The legacy buying from vendors has always been, here's the product, learn how to use our product, and try to do what you need to do, especially in such specific segments and the members that they're serving. Like one product does not fit all, and I think everybody struggles with that. But I think with what the technology does now is credit unions can say, this is the technology I need This is how I need it to work. This is I need it to be able to change as we change or as we grow and adjust. And I think they can actually make the roadmap of what they want these systems to do and work for them. And honestly, I think it also gives them a very unique opportunity compared to traditional banks, because they can actually make agents or products or solutions rapidly that give true value to the members that they're serving, because they understand what they do in their careers. So I really think that the compass is going to be passed to the credit unions themselves on where this goes. And partners like us are just trying to empower that roadmap.
Beautiful. Well said. Well, I can switch over to audience
I'd love to
questions.
jump
Jim, do you
in. I
want
was going to
to?
let Nick
Please
jump in
do.
really quick.
Oh, go ahead.
Please do. Let's leave the floor open here.
So
I'll
it's
just
going to look
say,
different at every credit union. Oh, go ahead, Nick.
no, go ahead. It's going to look different in every credit union. Right? We're going to say the same
Yeah.
thing. So go ahead.
We're going the
Mhm.
same direction. So
Yeah.
I put my credit union hat on from 4 years ago, and I think about the pandemic, and I think about closing down branches and helping our staff members do outbound calls to our members. We had a We Care campaign, or our lending went through the roof during those years, and we had to have people help fund. We had to retrain people to fund our indirect program, things like that. We're going to be able to utilize agents to gain those efficiencies. And so every credit union is going to have their own needs and are going to be able to direct the right partner to help solve the challenges they face, gain a deeper understanding of how these projects work, how the workflows create efficiencies in the business, and find new and exciting ways that we're not even thinking about today to use agentic AI. And so I think where it's going is the credit unions that are getting on this now are going to be able to start making those adaptations soon. And the credit unions that wait are going to be very far behind the 8 ball on efficiency gains. And the first step in a new partnership is to go through the process of finding the right partner. And our team at Curql, we work every day to find the right partners to look at. And obviously, our credit unions are doing an RFP process just like yours, and probably looking at multiple potential business partners to go live with. We hope that by finding Uptiq, after I think we met with 15, it was more than a dozen different potential platforms for agentic AI, that we found the best one. The technologists on our team, Dave Tucker, got into the guts of these businesses and into their technology and gave us a very big thumbs up that Uptiq is the company to go with at Curql. And so if you're on the fence about this, I would implore you to talk to Uptiq, because you don't want to be waiting a year to find the right partner. Go through that process now, identify the partner of your choice, and then start going to work on utilizing agents to gain efficiencies at your credit union.
And you can start small. You don't need to start big, right? So, start thinking of a use case that might be already solved by your provider or your partner like Uptiq, and see if put it to work. You don't have to tackle the biggest and baddest problem out there yet. So, and I guess we're repeating ourselves. The other thing is, get dirty. Get out there, find a way to get in a room with somebody like an Uptiq and start talking about it. So Kyle was talking about an event a couple weeks ago in San Francisco. And those credit unions were getting dirty, right, Kyle? They were down in the weeds on, hey, how do we solve for this? Kyle gave an example of where he took a use case back up to his room and solved for it in 3.5 minutes. 3.5 minutes using their technology. So, I mean, those are the kinds of stories that are going to be fun to solve for. So, we're going to take the show on the road. So look for a Curql sponsored event at a credit union near you very soon. You don't have to be a Curql credit union to attend if it's near you. And Jim will probably be getting the word out on some of those things as we take Uptiq on the road as well. So That's what I have to add. If you're a Circle Credit Union on the call, thank you for joining us today. If you're not a Circle Credit Union and you're on the call, there are ways for you to join our ecosystem and to join our conversations without being an investor. And not a lot of people know about that, so we want to keep spreading that word as well. So I'll be quiet and let you guys continue.
Great. Thanks, Nick. And I think to your point about finding the right place to start, we do have a menu. I hate to use the word menu, but we have some resources that we'll share after the call to help you think through where are some of the possible starting points where we've seen a lot more adoption and proven ROI. But let me now switch over to some questions from the audience. And if you haven't submitted one yet, be sure to hit that Q&A function on the taskbar in the virtual meeting. I'm going to start with one that I knew we were going to get. I'm going to break it out into two questions though. So starting high level, is it more practical to think about agents automating tasks or replacing jobs? And then taking that a little bit farther, just for some of the possible executives on the call today, how are you thinking about coaching employees around either the threat of AI or how to work with AI to really make the most of your job and ensure that longevity?
Be happy to jump in. The opportunity is to be everywhere in your community. The opportunity is to repurpose people as you have different turnover at your organization, to hire more people who are out there pressing the flesh. Relationships are always one-to-one, and that's not going to change with AI. AI is going to make it easier for us to do business in some ways and make it more competitive to gain relationships with your community. So that's my personal bent. So maybe take that with a grain of salt. But as you gain efficiencies in your organization, you're going to have resources that can do other things. So that's your branch as well, but it's the community. It's being everywhere in your community, being known as the credit union, being known as the people helping people business where you serve. And I think that is, to me, part of the success of this long term is that the credit unions that can gain those efficiencies can focus more resources in building relationships with individuals, and those credit unions are going to be very successful.
Yeah, it's amazing to think
Yeah.
about how it really does speak to the credit union movement in a big way. Sorry, Kyle, feel free to
Yeah.
jump in there.
Just no worries. Yeah, just to jump in there, I just think if people think this is the main purpose of this technology is to, fire people or to replace them, I just think they're looking at it wrong. I think Jim hit it on the head with repurposing. It's repurposing, but it's also giving time back to the things that actually add value to credit unions. Like, do you want the person that's doing your lending to, your business or your consumer clients, managing, oversight of covenants, or do you want them out talking about what's next? How do we expand? How can we help you with your business? What else can we do? And increasing that member experience. Like in the example I showed earlier about that I had built during that conference, that credit union had 4 people. That was what they were doing. They were just kind of looking at, age cohorts and figuring out, following up on achievement, and they're going to get repurposed to where once that's identified, they're going to be the liaison that gives, make sure that the credit union is sending out condolences, talking about what's next, how can this credit union help you. And I think that's the giant differentiation of credit unions. Like, you value your members, you want their experience to be, and you want to be able to take the next generation and show them that value, retain it, grow it, and continue through your community. These agents that come in will do the monotonous stuff behind the scenes that the credit union members don't really see, or honestly doesn't really add value other than what needs to get done from a manual standpoint to manage that relationship. And it's going to give more time to be in front of them and talking to them and expanding and being in your communities. That's really what we're trying to do. Credit unions operate with noble purpose. And the more time you can give to the people that are working at that credit union to strive in that noble purpose, the better. And I think this technology will absolutely show that value.
Beautiful. All right, so we've got 5 minutes left. I'm going to see if we can squeeze a couple more questions in. They're still coming in. And I really like this one. So who, from your perspective, who have you seen as the most effective executive sponsor within a credit union, and why?
Most executive sponsor?
Executive.
Well,
So if we're thinking about different roles within a financial institution, yeah.
oh yeah. No, it depends. It depends. Again, so we're a front, middle, and back shop provider. So it really depends. I mean, back shop usually head of compliance, head of risk, um, CTO, CIO. Mid shop, I always start at the people that are doing the daily tasks. It's very easy to get a lender to say, hey, I'd like to be able to spread faster, or hey, a deposit account opener to be like, I'd like to be able to do 7 account openings in a day instead of the 3 because of the amount of work that goes into it. And obviously that rolls up to the division managers and the COO. And then front office, obviously CEO, COO, CRO, and credit unions chief experience officers are great to talk to. But we kind of go across the gamut, and we always want to go and work with whoever we're solving the task for that's responsible for whatever division it's solving for. But to be honest with you, once we kind of land, we go everywhere. So we end up talking to all of them anyways.
It's an interesting question, and Kyle's right. It depends. But if the CEO is on board, it's going to get done. And so if you can get
Yeah,
into her office and show how reimagining the business can work with Uptiq, that certainly is going to go a long way. But at every credit union, there's usually some people that are very plugged into innovation and technology, and those are the people that you need to meet probably before you meet the CEO.
correct.
Love it. Love it. Yeah, and great question. Shows up as anonymous on my side, but whoever that was, good thinking. Kyle, I think this one's for you. If it takes you 3 minutes to build an agent, do you let the employees deploy their own agents? Is it always do it for you in your model, or can a credit union DIY it?
So that's a great question. We make it look easy, but behind the scenes, it's not. So what we've done in that builder, that's really our prototype studio. What we try to do there, what the exercise is again, bringing your thought process and giving it visibility, and then from there, changing. So as we're building something bespoke, or we're building something one-of-one for an institution, that's where we can really craft it, sandbox it, get insights, change it in real time. From there, we then take that, because behind the scenes, the coding of that agent then gets thrown into our engineers, and we go through. With that said, we do have institutions that actually have like innovation teams, technology teams. And although on their first agents, their first few builds were there, we do have the option to where our design studio can be purchased for a subscription fee and a consumption fee, to where credit unions or banks or whoever we're dealing with want to actually start building their own, and they have the resources to do so. That is an option. And again, that kind of goes to what we want to always emphasize is we're a partner that you can scale with, whether it be ready-made problems today, things that you want to go into tomorrow, or eventually helping you actually stand up your own building shop and use our library of skills in order to continue to build on your own. But yeah, it's a great question. Definitely book a demo and we can walk you through all sorts of them. But yeah, we definitely make it look easy. It's a little bit more than that, but I think we're doing it right if people are already saying, I want to jump in and build.
Got it. No, thanks for that, Kyle. And I think with 1 minute left, I do want to get you all back to your days. But we'll follow up after today's call with more resources and information on how to schedule a consultation. But I just want to thank Jim, Nick, Kyle. Great insights today, and a massive thank you to everyone who tuned in, who participated in the upfront poll and asked questions throughout today's session. If we didn't get to your question, again, we will follow up with you directly to close the loop, along with some of those other resources in a recording that you'll all be getting. But I really appreciate everyone's time today, and hope everyone has a great afternoon or morning, depending on where they're located.
Yeah, and
Kyle.
just real quick before I go, if you are a credit union out there that hasn't engaged with Curql or hasn't talked to them, they are unbelievably great to partner with. Please reach out to them. I mean, obviously from a fintech side, they've been nothing but absolutely supportive, but really pulling us into the credit union ecosystem so we know how to serve them better. But for what they do for credit unions, between the networking, the building, the consolidation of information that can help you guys do better, I would highly urge you guys to reach out. They're a great organization and they really care about their collective. So thank you guys so much for joining us today.
Thank you.
Everyone.
Our pleasure.
Thanks, guys.